The top news today, November 6, 2025. World. In the World Economic Forum, WEF, its head warned of 3 potential bubbles in the global economy. One in AI, one in crypto, and one in debt, pointing to elevated risks despite strong markets. Meanwhile, markets around the globe are reacting to these worries. Particularly in Asia, the recent rally in a few big tech and AI names has raised alarm bells about concentration risk and possible overvaluation. In the US, the Jamie Dimon, CEO of JP Morgan Chase, said he believes the Federal Reserve will remain independent, signaling confidence in central bank autonomy amid market turbulence.
Economy and finance. In finance, Wall Street bonuses are projected to reach the highest level since 2021, due to strong deal-making and market volatility. Yet at the same time, many firms are preparing for a workforce reduction driven by AI and cost pressures. Banking news. Wells Fargo's CEO said the bank expects further headcount reductions as the company focuses on efficiency, including AI-related automation. Bank of America's CEO indicated the bank may pursue more acquisitions in the payment space within the U.S., though not currently planning overseas deals.
Technology. Tech and chip stocks across Asia plunged as investors re-evaluate the AI boom. In South Korea, the Kospi index dropped around 6% as major chip firms saw large losses. A sell-off triggered by concerns about inflated AI-related valuations was labeled by some analysts as a breather rather than a panic, but the warning signs of a correction are getting louder. From a regulatory and structural view, the digital economy remains a major shift. Firms and governments are grappling with how to integrate AI, upskill workforce, and manage risk.
Key takeaways. Markets are not yet in panic mode, but caution is rising, especially around AI-driven valuations and concentration risk across tech sectors. Financial firms are in a mixed state, strong short-term rewards, bonuses, but simultaneously preparing for structural shifts, AI, automation, cost-cutting. For technology, the boom phase may be transitioning into a more cautious phase. Investors are asking how much future gains are justified by fundamentals. The global economic backdrop still shows signs of vulnerability. Debt levels, tech hype, and potential bubbles are all on the radar.
Major U.S. indices. The S&P 500 slipped just over 1% amid concerns around elevated valuations, particularly in high-flying tech and AI-related stocks. The Nasdaq Composite fell by around 2% as investor sentiment turned cautious because of what many see as potentially overheated expectations for tech and AI firms. Despite strong employment data in the U.S., tech stocks weighed on the broader market. The strong jobs figures lent some support overall, but did not prevent the tech-led decline. Key drivers of the drop included heavy losses among major tech names, such as the so-called Magnificent Seven, and growing chatter among bank and asset manager leaders about a possible market pullback or correction.